Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. We got earnings coming up next week and it's not looking pretty. We're going to tell you why. So let's dive in.
Trade Genius.
Hey guys, really briefly before we jump into this video, appreciate all the likes and subscribes. And if you can ring that notification button, that really helps us out. In addition to that, if you guys don't mind, head over to tradegenius.co. Check out our specials we have over there. There's a number of different specials with different packages for all different experience types. If you're more into education, we have a package for that. If you just like to get into the room, primarily, we have a package for that as well, where you can see where we're calling out trades and things like that live and also posting signals into our Discord signal rooms. So check it out, tradegenius.co. Appreciate you doing that. Hey, Bob, a lot of this data coming out with these corporations is scary. From Costco to Samsung, I can't believe what we're seeing.
Yeah, it's kind of like the trifecta, Phil. We have the consumer with Costco, we have the high end with Tesla, and we have the business community with Samsung.
Right.
And all of them are reporting massive corrections to future guidance. And I think we want to throw some of these things out here first. So Tesla, they're reducing pricing again. And so that must mean they're jammed up on inventory. And also they're feeling the heat from Ford now and the luxury brands from Germany. So Tesla has a problem already with profitability, and by lowering the cost of, the price of their cars, their profitability is going to suck. My view on Tesla always has been it's a meme pretending to be a company, and I think, Phil, when Tesla goes unprofitable again, I think its goose is cooked, and I think companies like Ford, and BMW and Mercedes are just going to stomp them.
The EV tax credits too are the standards for those are getting tougher. And like you said, they're a meme, have a hard time really running a business by itself. And they're always leaning on some sort of subsidy, it seems like, with Elon's companies. And so that's another thing, another headwind that they're going to face with these EV tax credits going away.
Yeah, Elon Musk, I think his greatest gift to the world is his ability to extract capital out of government.
Yeah.
Look, I really like everything he does. I think it's really cool. He's definitely a forward-thinking guy, but he can't survive without the largesse from government. And, and also too, we don't have the slide to show you, but as of next week, the Biden administration is going to enact even stricter protocols on mileage for cars. And nobody in this country is going to be able to buy a car under $50,000 under these new rules. And it's just going to just kill sales completely.
Right. And
so, it's just so funny is that, you're injured in a car accident and the ambulance comes and the paramedics come in and they slit your wrists. Yeah. That's kind of what's happening in this space. But it's not just there, too. Remember, we're saying, hey, guys, AI's coming, ChatGPT, savior of the world. Technology is going to ride to the rescue, and chip glut is over. Well, guess what, guys? Boom. Samsung is cutting chip output. And now this is broad spectrum memory chips. And you can't hide this. This is one of the things you check for economic vitality. How many memory chips are being created, because they go into everything. And it's a big problem. What do you think about that, Phil?
Yeah, I think it's a big problem. Look at how big their miss was here. Q1 profit is down over 95% year over year. Missed earning estimates by over 50%. Worst earnings since the 2008-2009 financial crisis. The things we're seeing here are crazy. The fact that the market is up at 4,100 plus is just a miracle, because if this market, or if the stock market was pricing in what the market is doing right now, we'd be at COVID lows. And I think the best example of that is probably the next slide we're going to see. But you're just looking at just abysmal numbers. It's just screaming at you recession.
And people don't realize that, stock market valuation is based on cash flow.
Yeah.
The cash part of the flow is starting to be missing.
Yeah, I kind of get the feeling too that maybe this market is running up into this earnings week, as a buy the rumor, sell the news type of thing, because I would be shocked if we had an overwhelmingly good earnings season here, which kicks off next week.
Exactly. And then here's the piece de resistance. This is the company everybody shops at.
Yep. It's at the lows of COVID.
It's just amazing to me. Strictly amazing. And the thing is, Costco does things really well, but they're really getting down to, I think the secret sauce at Costco was people went in there to buy food, but that's not really where they really drove their sales. It's in that middle section of the store where people are like, oh, by the way, while I'm here, I'll pick up an umbrella, I'll pick up some camping stuff, I'll pick up some clothes. And now people are just ringing that thing, getting the necessities and walking out the door. For me personally, I mean, if guys ran the world, Costco would be out of business because we never go in the middle,
Right.
And I think now that people are so tight on stuff, they're just not buying. And that's pretty scary, And Costco is another bellwether. I think we threw three bellwethers out here, guys. And, also, too, Home Depot and Lowe's are starting to slide away as well. So there's no place to hide. And what really drives activity in the market is the fire economy, which is, finance, insurance, real estate. And you don't buy furniture if you're not buying a house. You're not buying paint if you don't own a house.
Right.
You're not buying insurance if you can't afford other things. So it's really becoming problematic, Phil. And like you said, I think they threw everything at the last earnings report and threw the layoffs at people and then promised the street that this was just an aberration, that things are going to right themselves this quarter. And this quarter has the propensity to be, basically a bloodbath. And so it's really going to be really interesting to see.
No, I agree. I think these numbers, or even for me, like just looking at them when we were prepping for this video, I was very surprised at how low we've come on these numbers. It's shocking, really, considering, because you get the sentiment that everything's fine, the market's ripping higher, but the data is showing us the exact opposite. And like I said, look at where the market was at the COVID lows. Look at where all the commodities were at the COVID lows. These companies are giving us numbers that are the same numbers we had going into that March, April of 2020. I mean, it's really shocking.
Yeah, I mean, I was looking at charts here last night, and I mean, if you're looking at economic rebound, steel stocks and related and copper, those should be flying. They're dumping, Phil.
Yeah.
And it's really interesting. And I think people don't know where to go with their money. And so you got foreign wealth is going into oil, if you notice that.
Yep.
And then domestics going into gold. And so it's really fascinating to me that the bleeding edge people are already battening down the hatches. And I think the early adopters now have kind of caught on to what's going on here. And when the mass of people realize they've been forked here, is going to really be bad news. That's why you guys got to stay ahead of this curve. The songs they're singing to you are death sirens. You already need to be positioned, because once they're out, they're just going to close the door behind them, and you're going to be screwed. You're going to be the one that provides the liquidity on this market going down. And it's going to go down fast. I mean, we own a stock in our family portfolio, Caterpillar, just a long-term hold. We're not really touching it. We manage it through sold calls and stuff like that. This thing's swinging like an altcoin, Phil. It's going from 200 to 260 back to 209. What companies do that?
No, it's illiquidity. And you only see that in the bear markets especially when the Fed's not present to accommodate and you have this lack of liquidity. And what it is the larger market makers are running for the hills because they know it's extremely dangerous. And you see this every time the volume dries up. The volume drying up creates those weird price spasms. And then you get an expansion of volume. And that's because the market is dumping down rather quickly. On the next video that we do, we'll show a chart that kind of lays that out and shows us that where we are right now, we're on the brink of probably another one of those steep pullbacks.
Yeah, and maybe we should cut this video off now. I think we kind of made this a little long in the tooth. But yeah, guys, I'm telling you, nothing's getting better. And you guys consider yourself fortunate that this market is not sold off yet.
Yep.
This is the most well-telegraphed economic recession and market sell-off in your life. And if you're not taking advantage of it and lightening up positions or hedging yourself or getting cash or going into, I know, God forbid, T-bills, you have nobody but yourself to blame when this thing dries. And this thing's not going to be a V this time, guys. This is going to be an L. Once it comes down there, they're going to have a hard time getting this thing off the mat.
Yep.
Because of what the Fed and the Treasury are a bit at odds as to where they see this thing going. And the Fed has more firepower than Yellen.
Well, and I think, too, that's why the market has been staying up, because the market usually doesn't, when the masses are expecting, a bear market, and I think this is probably, like you said, the most anticipated bear market, it probably is going to take longer than usual to start really rolling over, because you mostly need everyone to be on the wrong side of the boat. And that's why I think like the dollar's not going to really go down. It's probably going to rally because everybody's on the side of the dollar going down, right? That side of the boat will probably get a rally through this next rollover. You're seeing a lot of people going like, well, market's not going down. Everything's fine. A lot of people on that side of the boat. So once the side of the boat is loaded enough, then you get the actual move. And I think we're on the precipice of that here. So anyway, that's going to wrap up this video. Thanks guys for watching. Please hit like and subscribe, and we'll see you on the next video. Take care.
Trade Genius.